And welcome. This is Mary Ellen McGonagle with the MEM Edge Show. And this is the show where we put you in front of where the action is in the broader markets. And boy, are we seeing a lot of action and by and large, very bullish. So let's go ahead and get started. Before we get into what we are going to be covering today, I did want to remind you that this is our last show of the year. And I will be back in the saddle the first Friday in January. So happy holidays to everyone. Let's get started here today. What we're going to be covering is our normal review of the current markets. You want to have a good feel for not only the standing of the broader markets, but then of course we will drill down a bit further and uncover pockets of strength so you can take advantage. The markets are going to be open for most of next week. And from there, we are going to take a look at trading stocks, rumor versus news. I think this will be a good exercise to help you really uncover the best time within these two scenarios for those of you that are shorter term trading. This is with an eye toward perhaps swing traders and shorter term traders. Best way to spot candidates with this rally that we're seeing in small cap stocks, and then ways to determine when the uptrend is over. And I think this is really critical given the fact that the markets have been on such a tear of late. And in particular, we have over 1,000 stocks in the US markets that are hitting a new high. So you're going to want to know, get some tips here on when to potentially take profits. And so we're going to get into that as well. I did want to take a minute here. This is something that I covered in my Wealth Wise Women show yesterday that I co-host with Erin Swenlin. And that's the concept of a Santa Claus rally. And it's something that's been in the headlines and in the news quite a bit lately. So I just wanted to cover precisely what this was all about. This concept came about in the early 1970s by a study done by a University of Michigan professor who went back over 100 years and was just examining this phenomenon that seems to occur at year end. And the study did uncover a period, a 6-day trading period, where the markets on average toward the end of the year came in with a 1.5% increase. And while that might not sound like a lot, it's comparing it to a generalized 6-day period that will give this a little more oomph. And that is on average, 6 days of trading in the markets produce a 0.6% return. So certainly quite a bit higher. So with that in mind, it is taking into account, actually, I said 6, it's 7 trading days. So it's the last 5 trading days of December and the first 2 trading days of January. So you can see the dates outlined here. It's not a given or a mandated action that occurs. It's just on average. So just wanted to share that little insight with you before we drill down and take a look. Let's review the S&P 500. We are looking at a daily price chart. Nice gap up here today, and we can see that the S&P 500 in fact did hit yet another new high in price. Let's take a look at this action relative to some of these simple moving averages. For those of you that follow me, welcome back. You'll know that I pay close attention during bullish uptrends to this 10-day simple moving average. This is this green line that is trending upward. Ideally, you want this price to stay above this 10-day as the markets are in an uptrend. And of course, we are seeing that quite clearly. I'm going to do some work over the weekend as far as looking at this price percent as far as the distance away from this 10-day moving average relative to other periods, whether this could be preceding a potential pullback, what we need to look for. So those of you that are subscribers to my MEM Edge report that comes out bi-weekly. You are going to be alerted to that on Sunday, as well as some other studies I'm going to be looking at, because the markets have been really just outpacing for quite some time. So at some point in time, we will be anticipating some sort of a pullback. But for now, we can see this RSI, that's your relative strength indicator, is trending upward. And it's also above this net neutral 50. So that's quite constructive. Going down to this moving average, convergence, divergence. This is another momentum indicator. We also want to see that above this net neutral 0 and trending upward. So all systems go relative to the broader markets. Let's go ahead and proceed. What I would want to do now is take a look at the underlying S&P 500, those 11 sectors that the markets are broken down into, because we really ideally want to stay on top of where the strength is, where are the money flows going to, and it's with an eye toward a continuation of strength in those areas. So what I've done here is populated this candle glance view from StockCharts.com, gone ahead and put in the ticker symbols for those sectors. And then you can do this as you wish, but I like to put in the RSI, that relative strength indicator, sort it by descending. So now I'm going to get a really snapshot quick view of where that strength is. It is going to sort it strength to weakness. So we can see healthcare is up here in the forefront, and it has been. For those of you that have been following this, the MEM Edge show each week, you'll know that we uncovered this really wonderful move back into healthcare. Let's go ahead and take a longer view look. This is, take a look at this. This has been a really nice uptrend that we've picked up about 3 weeks ago. And you can go back and watch some of the prior shows if you wish, because you'll see, as far as capitalizing on that, ways that you can. So healthcare continues to remain in a nice uptrend. We are going to dig into this further. This is that news versus rumor area that we can really highlight some of the action there. And from here, we can see the S&P in the forefront, but take a look, technology. And we did see a bit of faltering back here in the beginning of December, those trade war fears, not the phase one potentially not being activated of the US-China trade war, or at least we continue to get positive news as far as the firming up of that phase one deal. But it did pull back. Nice to see tech back up here in the forefront. And then sometimes you'll see smaller groups. This is communication services up here in the forefront, all about Netflix. That's a giant holding, and Facebook. Those are the two biggest. They comprise over 25% of this index. Netflix is up over 12%, Facebook having a good week as well. So then realistically, what we want to do from here is take a look at where some of the weaknesses are. And we can see that industrials, they have been languishing. This is an area that, again, got hit quite hard with that trade phase one deal perhaps not going through, but unfortunately it is not recovering, certainly not anywhere near technology. So that is something of note. We also talked about this last week, the fact that these high-yielding REIT stocks have come under quite a bit of distribution and are kind of languishing. They're coming back. This is an area I hope we have time, because it is seeing, I believe it's up about 2% this week, and it is seeing some traction. There's some areas that you'll want to put on your watch list as REITs potentially reverse. So those are those sectors. Let's drill down just a bit further from here. And again, using the candle glance view from StockCharts, I've gone ahead and put in some ticker symbols in addition to the already broader market indices. I like to take, for my work, I'm on the prowl for high growth stocks that are poised to outperform the broader market. So because of that, I populated this candle glance with semiconductor stocks, SOXX. IGV are software stocks, two big growth areas among technology. The Russell 2000 is here, and then biotech stocks. for those of you, again, that watch this closely, we picked up this really big strength in biotech stocks. These are generally going to be faster moving stocks, transports, and then gold. There are those that have some thoughts on this potential uptick here in these gold stocks. So again, using that RSI indicator, sorting its strength to weakness, we can see that the broader indexes are up here, the NASDAQ, the really tech-heavy NASDAQ that's going to benefit from that Netflix, Facebook, and then that tech move. The S&P 500, take a look here. Semiconductor stocks really in a very nice uptrend. We did cover this last week. Super good to see this area really progressing and outpacing the broader markets because these semis are really involved. Semiconductor stocks are involved in all areas of technology. So to see the outlook and then the prognosis, and then of course the money flows into this area progress positively is quite bullish for the markets. And then take a look here, small cap stocks. For quite some time during this year, they languished, but we are seeing money flows. This is another bullish sign, as small caps are generally more volatile, but a rally in small caps also points to investor confidence in the economy as well. So a very nice bullish sign. Biotechs we did talk about. So again, for those of you gold bugs out there, it's not something that I generally cover, but I'm starting to see a little bit of press as far as this potential turnaround there. So let's take a look from here, because what I would like to do is share with you some, before we get started, in some of those areas that I talked about, I just wanted to take a brief moment. For those of you that watched our show last week, the MEM Edge show, you may recall that I was reviewing with you the concept of identifying turnarounds. And quite quickly, what we did is we went into the technology sector. For those of you that didn't see this, I urge you to take a look. What I'm doing now is providing you with a follow-up. So technology was a big outpacer last week. Here we're looking, by clicking on that sector link, we're looking at some of the sub-industry groupings among technology. And what we noted last week was some of these. Actually, I want to do the weekly. That's going to be a lot more powerful. And that is what we did last week. And what we did last week was looked at a low scooter. This is the StockCharts technical rating, a low scooter group that really did well last week. And that was telecom equipment. And take a look. Continued outperformance. We were on the prowl for a turnaround in this group. We can just take a very quick peek here at that group graph, not the prettiest chart, but just pointing you toward potential turnaround candidates. So again, let's take a look at, my gosh, I want to move over. So let's take a look. Again, I would urge you to look at last week's show if you did not, because some of the stocks that we looked at, quite simply, I'll just share with you. For some reason, it's not responding, but we did take a look at Cisco as a candidate. I suggest that you put this on your watch list when it broke above that 50-day simple moving average. So the stock is up 5%, but more importantly was that concept of ways that you can look at some of these lower scooter rating, and that means technical rating, the higher the number the better, that are potentially turning around. So that is a quick review there. Let's take a look. I'm going to take a really quick break here. And when we get back, we are going to take a look at trading the news versus rumor. And then also, I do want to spend time on that uptrend reversal concept, given the real strength that we're seeing in these markets. So we will be right back after this break. And welcome back. So we are looking again here at the S&P sector's performance for this week. This is something you can access from the StockCharts.com first page. And what I wanted to share with you again and kind of zero in a bit more is this concept and this strength that we have seen among healthcare stocks. And I will tell you, healthcare stocks tend to be are in fact very politically, it's really a hot button, and a lot of it has to do with the Obamacare, will that be eradicated and so forth. But there has been news this week among these healthcare stocks, and we can see that healthcare providers are up really quite strongly, 3.5%. As we drill down into some of these other areas, medical equipment stocks up 1.2%. So let me share with you why I am pointing this out to you. And that is, we had this week within healthcare, we had rumors as well as news. And the specific news item that came out related to medical equipment stocks. Let's just take a quick look at this chart. We can see it's been in a very nice uptrend, but this week really it hit the pause button. And we had a nice little bit up today, but by and large for the week, these equipment stocks really did not do well. So let's go ahead and take a look, because this is the area that I said there was actual news. Hopefully this isn't too busy, but quite simply, the IRS, I am not giving you the proper news. The news here is that the US Senate permanently repealed medical device excise tax, and it's a 2.3% tax that came out with Obamacare. Really big news. But if we go back to that group chart graph, I will tell you that this area, these stocks rallied on the rumor. I'm hopefully not taking too long, but I'm trying to get this point across, that the rumor is where the rally is. And then once the news comes out, we see more just a bit of expiration in that given group. And we did see this with the trade war as well. The rally on the potential news, and then when phase one came through, it was the markets were nonplussed. So let's go ahead and I talk to you about this week's move into these healthcare providers. And I'm going to share with you another headline, and this is relating. This actually came out on Monday. United Healthcare, Humana, I will tell you, other healthcare insurance stocks came out or had a good week this week because of a rumor. This is about the reported health insurance tax may be eliminated. And the numbers here are huge. It's over 100 billion overall that will impact. So again, just pointing out to you the fact that the rumor is where you will tend to see a lot of the action. And then once the news comes out, a bit of a slowdown in the action. So let us move on, because again, I want to share with you this concept of when stocks have significant moves, and when you can know that the move may or may not be over. Now, again, this is with an eye for shorter term, but I will share with you some longer term secrets for those of you that have longer term horizons. Your investments, you like to get into a stock, stick with it, maybe even for a year. So I'm going to share a couple of views here with these stocks. So what I did is I went ahead and ran a screen. I wanted to see all stocks, and you can do this on StockCharts.com, that were up over 30% over the last 3 months. About 120 stocks actually came up. But my focus generally is going to be on these larger names. So let's take a look at, as of for instance, certainly Tesla has been in the news, and that stock has continued to hit new highs. Let's take a look at Tesla. On the daily, it had a big day today. Actually, not today, but certainly this week. So in the event that from my work, I like to see stocks breaking out of bases. You may have gotten into the stock at about 350. It's now over 400. It's creeping higher. We can see the RSI is overbought. And really, on this daily, we can see, and you'll want to do this with stocks. They tend to have personalities. Tesla can remain overbought for quite some time, but in essence, at some point in time, you are going to anticipate a pullback. So we are in that overbought period. So what I like to do, and this is an exercise that can be helpful again for shorter term investors, is take a quick peek at that 1 hour chart. This is a 60-minute intraday chart. I have a 5 and an 8 simple moving average that serves me really quite well. And ideally, when you see these big movers, you want to see the stock's price remain above these shorter term simple moving averages. And let's go back to a period when we got a pullback. This is taking us back to the end of October, overbought. And this is that kind of pullback. Now, you really could have stayed with the stock, the RSI and MACD. We're going to have better examples going forward. But again, this intraday chart can be helpful for those that are shorter term in your trading horizon. Again, this is, I'm going to share with you some names that were and are big movers. Let's take a look at State Street, STT. These guys have really made a name for themselves with the ETF space, and they've come out with really good earnings. So this is a very nice continuing uptrend that we've seen. This is a daily price chart. I have this 10-day simple moving average. We can see the stock continuing to advance. But on this daily, we can see that over the last week or so, potentially you could have put your money to work elsewhere, because for the week, the stock seemingly has stalled. But we are still in very good standing, again, for longer term. But let's take a quick peek at the intra-day, and we can see some of the dynamics that would give you a sense that STII on the very near term was kind of running out of steam, if you will. So we see a break below these simple moving averages, and the RSI trends downward. This is your real signal that we're in a bit of a stalling phase. This is very typical. The moving average convergence divergence will just slowly get into this zero, and now we're below. So the momentum, this is your momentum shift that is taking place. I'm not saying sell. As I noted on the daily, you're in very good standing. But again, for shorter term traders, let's take a look. I have a couple of more examples because we want to see when this is going to serve you as far as potentially exiting the stock and putting your money to work. Again, all very near term. So this is RH, Restoration Hardware. They came out with good numbers here, trended higher. This is news that Buffett was a big holder of the stock, or he had entered it recently. So the stock gaps up, hits a new high in price. But again, on this daily, over the last 2 weeks, we're just seeing a little bit of disinterest. By and large, intermediate term, the stock is in very good standing. You're still in good hands here. But again, going back to this intra-day as a sign, here's that big move up here in the beginning of December. And this is a bit more pronounced. When you see this price coming out, the RSI is up here and overbought, and then we see this break down below these simple moving average, and then you can marry it with this deterioration. This is your early momentum signal, the RSI black line down through the red, and they're not absolute sell signals. These are just more yellow flags, again, for very, very short term trading. So we can see over the last couple of weeks that RSI, the momentum, has shifted. And then we can see the MACD now down here in negative territory. So I did want to point that out to you. Let's do this. I still do work with institutions. They are going to be looking at a weekly price chart. And this is your red 50-day, and the blue line is your 200-day simple moving average. Same principles apply as far as this is RH on the weekly. You want this price up here above. So longer term, very good standing. This was pointing you more toward those areas on a very shorter term. So I'm going to check. Oh, good. We still have plenty of time. So there are some other items and areas that are on the move this week, and I wanted to point you toward ways that you could capitalize on that. So let's go ahead back to this sector summary for the week. Now, this is something that I also pointed out last week, and that was on last Friday, we saw a 2% rally in utilities, and it really caught my eye. Given that growth stocks are on a tear. So from there, I did some seasonality work and pointed out to you that utility stocks in January, if you look at the seasonality score on StockCharts.com, it has an 80. It had the highest out of all of these other sectors for the month of January. The others were in that 40 to 60 range. 100, of course, what it's telling you is that 80% of the time, I went back 5 years, utilities tend to outperform their peers in the month of January. So let's just take a look under the hood, if you will, on this utility. For those of you, I'm again more inclined toward growth stocks, but some of you may be thinking at some point in time we're due a pullback, that you want to counterbalance some of those growth stocks. So how can we get in front of possible candidates? So here we are looking at, again, this 1 week view, and we can see the scooter rating. Actually, geez, I should have, let's just do this quickly. I want to show you the group chart, because you will want to have that knowledge before you enter into this area. And we can see this is a daily price chart, and this is a very nice pickup here this week. We can see that it's broken back above these key moving averages. So from my work, we have a green light to go into utility stocks. So let's go ahead from there and take a look here. We can see, again, these underlying areas. And from here, scooter rating, conventional electricity has the highest rating. And quite simply, it's saying that technically this area is the most sound. And what we can do is then sort it by this scooter rating and take a look at some of the underlying candidates that are could potentially outperform next month. And AES is a bit of a smaller stock. Let me go ahead back and sort this, as I usually do, by market cap, because I do tend to favor some of these bigger moves, and larger cap names. So some of these stocks have had really significant moves this week, but we can take a look at some of the underlying stocks with an eye toward potential continued outperformance. So this is NRG. The stock is poised to break out of this 2-month base. Actually, it's about a 6-week base, and we're getting really nice volume on this uptrend. So that's really quite constructive. For those of you that are really into technical analysis, you'll note we have a double bottom here that took place. So some positive characteristics that are in place here for some of these names. NEE is a little bit sleepier here more recently, but it's been in a nice uptrend, nice gap up today. I talked about this in yesterday's Wealthwise Women show. This is a very diversified energy, although it's in electricity, but they use solar, wind, they use alternative energy. Warren Buffett is a big holder of this stock. But when you see this gap up today, take a look at this volume characteristic. It really is quite high. And the last time we had volume this high at the end of November was as the stock was positively breaking back above these simple moving averages. So ideally, when you're getting into some of these utility, as well as when you're looking to get into any given group, from my work, you want to see those that were first out of the gate, that first turned positive, because they are going to be your leadership names. And we can see NEE is up here. So hopefully you're able to see that and benefit from that. But again, I want to wish everyone happy holidays, and take a look. StockCharts.com is going to be providing some videos on each of the contributors, host their outlook for next year, and anyone with any questions, you can always reach me at MEM Investment Research, and take a look at my newsletter. You'll want to trial that into the new year.